If you're talking about a retirement plan, there's really only two things you should look at. I mean, if it's gold or if it's silver, you either look at gold or silver eagles or bar form or generic form. You want either the coin of the realm, which I think is gold. You'll pay more premium in silver eagles. But within a retirement account, they can't sell you numismatics. And that's where the real ripoff is. I mean, there's some people that interview all the time. And I mean, you'll see their faces from interview to interview. And what they're saying is correct. If you're going to do silver in the United States, you do junk silver or you do eagles. Those are the coins of the realm. If you're going to do gold, then you want either eagles or you want...
Bill Holter. The key focus is on the growing importance of owning physical gold and silver in the face of an impending financial crisis. Holter emphasizes that precious metals represent real, tangible capital, unlike paper or digital assets within the current financial system. He argues that owning gold and silver outside the system offers protection, especially as the global economy heads towards instability. Holter's main advice is that individuals should only leave enough money in the system to cover their immediate expenses and withdraw the rest, investing it in precious metals to safeguard their wealth. He stresses that traditional fiat currencies will continue to lose value, whereas gold and silver will increase in worth as financial systems collapse. However, predicting the exact future purchasing power of these metals is uncertain. The video also touches on the misconception surrounding municipal bonds and pension plans, with Holter clarifying that municipal bonds are tax-free, not tax-deferred. He encourages people to focus on taxable bonds if they are managing pension plans. Holter explains that whether one owns a small or large amount of precious metals, the important thing is to accumulate some as a form of protection. Historically, holding gold or silver has ensured wealth preservation, and he believes this will continue.
Out of the system, you have capital. The only question is, how much capital do you have? Do you have enough capital that you'll be able to live on, pay your property taxes on? I mean, everything's relative as far as size. You know, if you've got just a little bit of gold and silver, yeah, it'll help you eat, but it's not going to help you pay taxes. And just to correct something that you mentioned, that these municipal bonds are part of pension plans. They're not. Municipal bonds are tax-free. Pension plans are tax-deferred. There's no sense in anyone ever owning a municipal bond for a retirement account. Those are all taxable bonds, whether they be corporate or treasury. But that's what the pension system is built on. It's not built on muni bonds. You can't do a rule of thumb because you don't know what the future purchasing power is going to be. It will increase from where it is now. How much, you have no idea. I mean, it may be that if you've got 200 or 300 ounces of silver, that might be enough, depending upon what the revaluation, what the reset is. All I can tell you is, historically, if you had 1,000 ounces of gold or 10,000 ounces of silver, you were a wealthy person for hundreds and hundreds of years. Do those numbers, will they still work? Yeah, I think they probably will, but there's no way to know exactly what the purchasing power is going to be. And I would say you can only do the best that you can do with what you have. I mean, you know, one person may have saved a grand total of $50,000. Somebody else may have saved $5 million. It means the same to each person and that's their nest egg. And the one that's at 50,000, you know, can't do anything to get the 5 million. So do the best you can. And I would just say the rule of thumb is you only leave in the system what you need for current bills, and you take everything out of the system that you don't want to lose, because in the system, you're going to lose it. So, I mean, do the best you can. There is no way I guess there is a way, if you could do the math based on today's pricing and today's purchasing power, if you're comfortable now, you should certainly be comfortable later because the purchasing power is going to pick up. I don't know. Is it going to double, triple, quadruple? Who knows? I mean, there's no way to forecast that. But understand that the purchasing power will pick up. So, if you've not been able to accumulate thousands of ounces of silver or hundreds or thousands of ounces of gold, don't fret. Just do the best you can. And it may work out that what you're thinking is not enough today may end up being enough to get you from here to the next system with wealth intact.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
He also warns against over-reliance on financial advisors who often discourage investing in precious metals, deeming them risky. In Holter's view, these advisors are part of a failing system, and gold and silver are actually the least risky assets due to their zero counterparty risk. They cannot be wiped out by bank failures or government defaults. He also touches on personal responsibility, urging people to take control of their wealth and protect themselves, as no one else will. This extends to making tough decisions, even if it means going against the advice of spouses or financial planners. In terms of investment advice, Holter recommends focusing on gold and silver coins that are easy to buy, sell, or trade. He suggests...
I guess I would just be blunt and tell you, don't take shit from anybody. It's your money. You worked for it. It's your money. It's not their money. You get to do with your money whatever it is that you want to do. And yeah, if you go to your financial planner and tell them, I want to take X amount of dollars out, or I want to take the whole account out, or whatever, and they're going to ask, what are you going to do with it? You tell them, I'm going to buy gold and silver. Well, the first thing they're going to say is, oh, well, don't do that. Gold and silver are so risky. Well, I mean, gold and silver are the opposite of risk. They have zero liability against them. They have zero counterparty risk. They cannot bankrupt. When that brokerage house goes down, you've got your gold, you've got your silver in hand. It didn't get touched, whereas your share is going to be taken away in the great taking. And I would just tell you, whether it's your financial planner, or whether it's people, friends of yours, a spouse, it's a little difficult because it's always good to have your spouse on board with what you're doing. But if your spouse is absolutely adamantly against doing gold and silver, just understand that no one is going to protect you for you. The only one that's going to protect you is yourself. So, again, it's your money, and no one's going to protect you unless you protect yourself. So, take action. If you're talking about a retirement plan, there's really only two things you should look at. I mean, if it's gold or if it's silver, you either look at gold or silver eagles or bar form or generic form. You want either the coin of the realm, which I think is the best thing to do. You're going to pay some premium, small premium in gold. You'll pay more premium in silver eagles. But within a retirement account, they can't sell you numismatics. And that's where the real ripoff is. I mean, there's some people that interview all the time. And I mean, you'll see their faces from interview to interview. And what they're saying is correct. If you're going to do silver in the United States, you do junk silver or you do eagles. Those are the coins of the realm. If you're going to do gold, then you want either eagles or you want pre-33 gold. And I think pre-33 gold is an excellent choice, But understand there's very, very little difference in price between, say, an MS-63, 62 or 63 St. Gaudens or Liberty versus an Eagle. They're almost the same price. Mm-hmm. Whereas the one that I'm thinking about right now, they charge regular retail price on it, so there's already a markup in it, and then they charge 26% on top of that. And people, you know, they don't check their invoice, they just send 100,000 or whatever, and they get the coins and they think they're good until somebody asks them, what did you pay for it? Or they go to look to sell it and they find out they got completely smoked on the buy. Mm-hmm. And that is disclosed. But in what industry, in what world?
U.S. junk silver, or silver eagles for silver and gold eagles, or pre-1933 gold coins for gold. He cautions against buying numismatic coins, which are often sold at high premiums and markups, particularly in retirement accounts, warning that these coins are more of a trap for the unwary investor. Finally, the video concludes with Holter discussing the broader economic outlook. He warns of rising property taxes and the collapsing real estate market, particularly in the commercial sector. As housing prices fall and jobs become scarcer, he questions how municipalities will manage their finances.
No shock whatsoever.
One of the things we've observed and we've had close friends, acquaintances, and family members who all in the past decade or two have been basically taxed off their property. They had to let go a lake home that had been in the family for generations, et cetera, that sort of thing. And there's the old saying, right, from the Communist Party, grind the middle class between the millstones of inflation and taxation. Go ahead.
Yeah, I mean, there's no question about it. People are finding it harder and harder to pay taxes. I mean, I bought where I am now back right as COVID started. I mean, like the first week that COVID started, I closed on this place. My taxes have doubled here, or very, very close. They're probably 93% increase over 4 years. And of course, that includes, you know, they did pass a bond for the school district and what have you. But I mean, that's not a surprise at all. The question is, what happens when real estate does fall? And it's already starting to soften. I mean, you're seeing commercial real estate has completely collapsed. Probably the average commercial property today versus 4 or 5 years ago is down 50%. I think you're going to see the same thing in housing. I think you could easily see 40, 50, as much as 70% or more drop in housing prices. And I think that'll be a function of more difficult credit. It'll be a function of less people having jobs, less people having the ability to even pay for a mortgage. Now, the question is, what do these municipalities do? Where do they cut? How do they cut? It's literally, I guess it goes back to what I said originally. The math does not work. The whole system is cooked because the math doesn't work in any facet or any corner of the system. They've pushed the math to and beyond the limit of
that the entire system is strained to its breaking point. The financial math, he argues, simply does not add up anymore. In summary, Bill Holter paints a grim picture of the global economy, urging viewers to protect their wealth by accumulating physical gold and silver. He believes that the coming economic reset will leave those who hold precious metals in a much stronger position than those who remain dependent on the traditional financial system.